This is picture perfect reminder. This is FOMC release, 1 second formation. Magnificent, spectacular long right now is a little bit tired. Reminding you, obey the rules. Don't ever be in a trade unless you're in spectacular profit and you stop at break even. This was 1 second formation reminding you the danger of being in a trade. If you didn't take the profits off the table and you did move the stop to break even, you're in serious trouble. Right now, I hope and pray you are out. So, markets can collapse right now all the way back to 1990 and lower area. This is FOMC as expected. So again, on daily chart, this has been my projection on daily chart that S&P is flying all the way to 2020. But trading 101, 2000 level is a historical level. Sellers stepped in at 1998. 1 minute after FOMC release, I'm allowing markets to settle down. To settle down. What do you mean 2004? 2004 was never reached. What do you mean 2004? Rodney? Price reached 1998. You remember what we discussed. Allow price to settle down. Spectacular selling pressure as expected. The danger of being in a trade, multiple time frames reminding you. Know what price is telling you. The moment I see buyers stepping in, I will re-enter long. Proper rule, at least 5-minute pause. Whew, wild stuff, as expected. Correct, Alphys? How critical it is not to be in a trade. Doesn't matter if it's extremely bullish, if rate is hold or not. That's a reminder. Do not ever exercise greed. Do not ever touch S&P at the time of the news release. Remember, orders are all market orders for stops, which means if price collapses and retraces many points, it don't matter if your stop is 1 point or 2 points. You could be stopped out at 20. This is exactly what we expected, and this is exactly what played out. 3 minutes after release, I'm waiting patiently. Until 5 minutes after release, I ain't touching this. Would you like to see where I expect S&P to take a pause? Would you like to see how predictable the price is? Price is magic. Bearish trend reached the end of the minor trend is taking a pause. So, monitoring the formations here. Is this the end of the minor trend and buyers will step in with vengeance spelled out by the price since overnight markets? That's what we waited for carefully, knowing extremely well. Number 1 rule in Alpha Wave Trader method had been obeyed, reminding you to respect that. If this level is broken, I would be interested in this one. Is that clear? But this is right now the key. We are 4 minutes after FOMC. I'm monitoring very carefully. How much fun can trading be? Is everybody clear how essential it was not to touch S&P? 5 minutes after S&P release, you witness very powerful correction to the downside that confirmed that sellers are weak, completely weak. Buyers stepped in. Our trade on S&P reaching reversal zone. We are monitoring for selling pressure, It's extremely important, extremely historical level. 3 points later, very powerful reversal level had been reached. So, if that level is broken to the upside, S&P is flying to 2,950 and next level 2022. But we know that on our trade, this is reversal zone, and that's precisely the reason I'm seeing selling pressure as spelled out the moment I entered trade. Is that clear? That's the power of Fibonacci, and that's the power of the price. And if you know where these levels are, you know where to take profits of the table. Trail at 1996, we know how important this reversal zone is, as it had been reached. If S&P is blasting to 2000, next level 2009 on larger time frames. If S&P is blasting through my reversal levels, which it had been respecting to the tick, I am going into a larger wave expansion. Is that clear? Poor S&P is struggling immensely, as we knew to expect, because reversal zone is reached. Oh no! How predictable can price be? Price tells you far in advance where these levels are. 2000 is not broken. It's been spelled out by the price that it's extremely powerful reversal zone. Your stop should be at break even. So here's the bearish pullback on S&P, as we expected, because our reversal zone had been reached. S&P respecting the end of the minor trend. Will buyers pick up this theme? Okie dokie, so it was fantastic, exciting, and very, very entertaining FOMC, as it always is. 3-point trade. And that's all there is. Pure price for entry and Fibonacci for exits. Look forward to seeing you tomorrow. Thank you, traders.